Hey guys, Mike here. So, oh boy, what a rug pull in the market today. I don't know if you noticed it or not, but since it's my job to watch it, I definitely noticed it. And I tried to find one piece of news that caused the major sell-off after lunch. And I couldn't find but one piece of news. Some of the members were bringing it up, so I looked into it. Maybe that was it, but I will show you exactly what happens when you start to approach a key level and big money sees blood in the water. Okay, show you exactly what they do to keep pushing this thing down for them to make money. Okay, so just keep that in mind. But we did have some jobs data come out today. The market liked that as well because it goes towards the soft landing narrative. There's also something else. I told you we'll keep an eye on it. If it continues to go, it's not going to be a good thing for the second half of the year. It's not going to be good for people's pocketbooks. And also, we're going to see if next week, again, we've been talking about the seasonality, the weakness in August, September and stuff. We're going to see these key levels that were broke today, if that does open the floodgates for more downside. It's not going to be a straight down move. I'm not talking about a crash. I mean, I can't predict that. I can't predict black swans or anything like that. But I'm just saying, we've already talked about this, so nobody be surprised, right, that if we see a 5 to 10% move down. And again, I get videos mixed up sometimes because I do 6 for you guys. I do 2 a week for the members. I go into a little more detail on certain things, so you may think I'm telling you and I'm actually telling the members sometimes, but I'm sure I've discussed this multiple times on the channel. And so, getting into the job data first, and the one thing we better watch out for, because it will definitely make a very interesting half of the second half of the year, that is you got obviously the job data came out today. You can see we added 187,000 jobs. You can see it's pretty consistent, right? Over the last like 5-6 months, staying steady. You also have down at the bottom there, and again, I was wrong about unemployment. I said go up by 1 tick, just a complete guess. Instead, it went down to 3.5%. Look how sticky wages are, though. 4.4%. Like, this is the Fed doesn't want to see this stuff get sticky like that, okay? And so again, how do you fix that? You force a recession, which they don't even see in the cards anymore, right? Because that was the whole thing about the economic data. People said, oh man, this makes for that soft landing. Maybe they'll pull it off the first time in history. I think they did it in 97. We'll have to see. Now, money market funds are drawing 5% on interest now. This continues to go up. It's around $5.5 trillion in money market funds right now. And again, this should continue to head towards 6 as long as rates stay high, right? So that's helping out a lot of folks out there. And now, what we got to watch out for, I'm telling you, man, XLE, we've been talking about it for a while now, and you can just see that thing continues to pump up, okay? And it's falling in this channel right here. Will it continue to go to that big key level up there around 92? We'll have to see. But you see what oil's doing, right? It's just falling up this trend line since the end of June, going on up. And if that continues, you're going to see gasoline prices continue to rise. Oil goes into a lot of different things, okay? So just keep that in mind. And then, here's the seasonality. Really, in August, it ain't supposed to be that great of a month, up and down, but look what happens in September going through December. And so, again, I know the business cycle is all thrown off. Maybe this doesn't come to fruition. Who knows, especially with the shortage of oil and all this other stuff, and the cartels doing what they're doing with supply and demand and stuff. But if this seasonality pans out, you're going to see inflation get real sticky real quick, and your pocketbooks are going to be feeling it, paying extra for gas and all this other stuff. So just keep that in mind, okay? And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And that does lead us into what happened to the market today. And somebody asked me, said, what's your goal of the channel or whatever, something like question like that. And I just got to say, honestly, it's changed over time. I always say this is your channel, not my channel. I just kind of do, what people want. But the one thing, the main reason to start this channel, and will always be this channel, and the reason why it'll always be a small channel, is because I feel like as Americans, over time, we get dumber. And I don't mean to be offensive when I say that, because I'm probably not talking to you because you're actually watching the channel trying to learn something, right? And I'm trying to research and put stuff out there. But I just feel like, here we are. You know these people, right? You're sitting there with a computer in your pocket, and they'll ask you like some lame question. All they have to do is Google, right? But I just feel like we're too busy, looking up new cat videos versus actually trying to learn something, actually trying to learn how the market actually works, right? It's like people that still dollar cost average in blindly. Like my son, I have a note, written up in this little diary I keep, this little private channel now that I'm starting to add to and stuff, that no, you will not absolutely at any moment dollar cost average in blindly. There's too many easy ways for you to do it, And if you can add 1, 2, 3, 4, 5% every time you put that money in to the stocks or the ETFs or whatever it is you're doing, over a 30 to 40 year time span, you're talking about millions of dollars extra. So, please, thousands, millions, whatever. But, stuff like that. It's like, and so I started this channel to say, let's figure out one, how the market really works, not what, commercials and the media who we know is skewed and all this other stuff is telling us how it works, right? It's let's figure out how the market really works. And so I think that's my number one goal. Number two is to keep you updated on what the heck is going on. You can do what you want to with the data without trying to skew you to believe what I believe or anything like that. Again, maybe in the members videos, I definitely get a little more details. I'm being a little more free about it. Because I don't have to worry about being demonetized and stuff, but, stuff like that. But I mean, that's kind of some of my goals, obviously a lot more short-term stuff in here because look what the market's doing. It just, it's all over the place. The market's changed so much in the last 3 years. It's insane, right? With these zero DTE options and everything else that's been going on. And so, yeah, I mean, I guess hopefully that answers the question somebody asked me, but just kind of put that out there too if you're wondering. Now, getting back to the market, I did see news where Ukraine had, I think they attacked some Russian ship or something like that, whatever it is. And all of a sudden, it's got to do with wheat and oil or whatever it is they were doing. I can't imagine that would really sell the markets off. They tend to like to use these things as excuses, you know what I'm saying, to happen. But here's what happens when blood's in the water. When you see key levels getting broached, this is what happens. You can see right here between 210 and 220, the put sweeps came flying in, okay? And on the SPY here and stuff, even though I'm going to show you the S&P, it's just easier to show you. But, you're talking about hundreds of thousands to millions of dollars of these puts coming in. And I told you it goes both ways, right? You get these gamma squeezes up from all the calls. Same thing happens when you're coming down. But what happened was around 2 o'clock, you broke 45.28 was the first level to watch out for, right? And as soon as that happened, here comes the put sweeps coming in. As soon as we started nearing 4,500, which is a key level, boom, they started just shoving this thing down, smelled blood in the water, jumped all over it, and finished it off, okay? Because that was a key level. And that's what I'm saying, what to see what happens next week. Now, understand, the only thing that kept this thing going at all is really semiconductors and Amazon. If Amazon would have had great earnings, man, and been up, almost 10% at some point in time today, can you imagine what the day really would have been? It would have been a hot mess. And you can see, as what we talked about yesterday, right? Real quick on these indexes, that 21-day moving average, we bounced yesterday, went down below it today. Okay, so watch out down below. See if we end up heading down, at least at this trend line, which is around 443, somewhere in there. And if we break that, then obviously around 431, 432 is going to be the next level to watch on the SPY. Again, it's usually don't go straight down. You'll get your bounces here and there and stuff. And then, of course, the QQQ was below it yesterday, got back above it midday, but then couldn't close, but still holding that it was like 72 area right in there. So just keep that in mind, 371, 372. Still don't want to break that at all, it seems. If it does, definitely heading down to 364 most likely. That would be the next level to watch. So keep that in mind. Again, if these indexes are going down 1-2%, the stocks are going down way more than that as you got to see today, right? I mean, even obviously we'll get into Apple in a minute, but to see Apple going as much as it did, that's a big one for the market, okay? And then you go over here to IWM, which again we talk about. There it is, that trend line. It just can't get above it, stay above it. That 21 EMA is coming up fast. If it breaks that, we're definitely going to be going straight through this volume gap right here. So just keep that in mind. Again, the seasonality sucks for IWM right now. We'll see if that plays out. Now, Amazon held the market up. It's what took it up this morning when we opened and stuff after we got the red. I mean, up almost 10%, which is huge for this stock, right? It got right up there to the top of that ascending trend line, and then that's when it rejected. Okay, so again, it's been in this channel since March. It respects it. Again, has a lot of support at 130. So, and this has a lot of momentum behind it, as you can see. But there's that channel. As you can see, it not only bounced off it once, it rejected twice off that. So we'll see if it comes back down through that volume gap after some people start taking profits, depending on where the market's going. DraftKings, big day for DraftKings. They're another one that popped big on earnings. Again, this is one that could move fast. It's been just slow and steady, just going up that trend line right there. But the reason why it can move fast, let's get rid of that arrow, is because it crashed and burned. That's what you see on the weekly, this huge volume gap right there, right? Because it ran up so fast and it ran down so fast. There's not really a whole lot of support or resistance. So this one can run up fast, run down fast. Again, it's gambling. You got the NFL season coming up, all kinds of sports bets. And the good thing is, even if we do go in a recession, the degenerates still gamble, right? People still gamble. I didn't know that, but that is the case. I'm not a gambler because I don't have leading luck. Now, Apple. Woo boy, this one right here was a mess, okay? And this is what a lot of people are waiting on. This is what happens, though, when you're the heaviest weighted stock in all the indexes, right? When it has a bad day, the market will have a bad day. That's why I was really surprised when we ran up into the green. I was like, wow, really? What's going on here? And so a lot of people got pulled in, but again, it fell right through the volume gap right there and left another gap. And so about 182, 183, it really needs to hold, because if not, it's definitely coming down. Probably around 175, 176. Keep that in mind. I'll be shocked if the market don't buy it up, though, because it's Apple, right? You look at Square, it got absolutely pummeled after earnings, just like PayPal did. And this is one of those ones they thought this was going to break into a stage 2 with these earnings, and that was not the case. See the big, huge green candle. So this really technically is in stage 1 still. But if you look at it, though, going back all the way to July of last year on the weekly, what do you see? Lower highs each time, right? And so, we'll have to see if this can recover or not. I don't see it anytime soon happening. But then, you fall 9% one day, maybe you get a short-term bounce. But that one is in a hurt locker right now. AMD, hey, I told you semiconductors are still up. This one was up again. It's still sitting right there, that trend line right there, right below the 50s. It did sell off a little bit at the end of the day and stuff, but if it can break out of that, it can keep heading up. Now, it's amazing what AI news will do for you. That's what propelled this into it yesterday. And so it just kind of keeps that momentum going when big money starts moving in. But I'm still watching for this one to drop if weakness continues to set in. Now, Tesla, we finally got our third touch on this trend line, which I just added. Got rejected off of it. So you are seeing lower highs coming through. But the good thing is you're not really seeing the lower lows. It really wants to keep that 251 to 254 area. It just refuses to break it, right? Every time it heads down, dip buyers roll right on in and keep buying in. But again, this is another one just has a boatload of gaps below it. So we'll see. And the seasonality is normally you get a pop somewhere in August if it continues. But after that, sideways to down. I mean, that's usually where it's at. And then it gets a huge push from November to December. We'll see if that's the case or not. Again, you got some news coming out. This is kind of, to me, misleading because, BYD, which is a good company, by the way. It's a strong company. There's a reason why Warren Buffett put a lot of money into it. Is pulling away from Tesla in the electric vehicle sales war. That's actually not true because BYD does a whole lot of hybrid sales and stuff. But they're not a company you want to take lightly. I mean, they have the backing of the Chinese government. Trust me on this one. And so, of course, and they have caught up, whether it's hybrid or not. They have caught up and passed Tesla on the overall vehicles. I don't care if you're selling popsicles, whatever you're selling. Once you overtake somebody, you overtake them, okay? And in China, I don't know, over here, I mean, I know a lot of people that would do hybrids over EVs any day of the week. And so just keep that in mind. But again, the companies you can't compare on because, in a way, they are comparable because like BYD does batteries and all kinds of crazy stuff like that as well, just like Tesla. But also the fact that their margins aren't even nowhere close. I mean, the margins they get on their cars aren't anywhere near as close as my understanding when I've read than Tesla actually does get. So Tesla definitely has an advantage on that. But, remember, China is a foreign country to us, right? I mean, Tesla is a visitor there, right? Who does the Chinese government want to really be number one? Most likely a Chinese company, okay? So just keep that in mind. Then again, though, in America, who was number one for years? Toyota. So we'll see what happens. Now, a good thing for Tesla was what came out in Europe, right? So you got the Tesla registration. You can see this year, I mean, those things are moving up fast, right? So Europe's expanding nicely. And this shows you every year that they've had registrations in Europe and how much they've grown, how fast it's accelerating. So that is a good thing for them as they expand their business stuff into other countries and things like that. So we'll see what happens on that. But, again, I'll do a video on Sunday setting us up for earnings, economic data, what it's going to be looking like, more detail on the charts and stuff as far as the levels and stuff. Because, today it does, I tend to not take Friday moves. I tend to take it with a grain of salt because it is weekly options expiration, right? So that's why you see huge down, huge up, huge down, a lot of shenanigans, right? And for the market makers to do and stuff like that. So just keep that in mind. You saw a lot of stocks. I guarantee people were doing all kinds of, straddles and things like that on some of these earnings, and they just kind of went flat, right? And you see that a lot on Fridays. And so there's some weird movements, some weird ups and downs. So, Monday we'll find a little more. Again, it's not going to be straight down. It's not going to be straight up. Understand, but this does open a door for more weakness, and nobody should be surprised. We've been talking about it, all right? So don't get upset if somebody comes along and says, oh, yeah, we should see a pullback here, right? And so, and trust me, I know I already see them coming out. All the crash videos are hitting the airwaves, and people have been calling for a crash for 9-10 months, really souping up. And hey, maybe they're right. Again, nobody can tell, and I always say this, and I say it in many videos, the fact that, I did this in the members video yesterday, I said, when you look at all the list of things going on right now, not just here, but around the country, the fact that the market is sitting where it's at is absolutely, it's crazy. Honestly, when you look at it and compare it to from 2010 and 2022, what was going on, it made sense to hit those highs now that we know what we know, right? When you're sitting there with zero interest rates, money is just free. There's only one game in town, which was stocks, right? And then crypto came along and stuff. All this free money floating around, checks flying everywhere, and all this stuff, and the Fed doing what they're doing, and now to see the Fed doing the opposite, everything's just the complete opposite, and we're sitting almost, I guess, 7% away from all-time highs. That's mind-boggling, but that's the market, right? That was the note to my son, which I showed the members, to say, remember, it'll be years from now before he reads that note, but to say, remember this right here. This is the market. It is not the economy, okay? And there's many other, adjectives and verbs and everything else I could use, pronouns, to describe the market, okay? I think I've done it before, but, that's what you got to keep in mind. So we'll see what happens next week. I'll talk to you guys Sunday. Hope you end up having a good weekend. Please hit the like and subscribe button. Really appreciate it, guys. And I'll see you Sunday.